Hello and welcome to Pro Trader Strategies Market Commentary for Tuesday, June the 19th. My name is Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies that you can implement in your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. Please remember that past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data. Earlier this morning, ECB President Mario Draghi was speaking. That's not really what's driving the markets today. But let's talk about the building permits here in the United States. Was a bit of a pullback at 1.3 million permits pulled, expected to be 1.35 million permits pulled. Slightly less than expected there. That building permits is a little iffy because we're seeing a pullback in building permits, which would mean an expectation of not as many housing starts maybe. Well, we're not really seeing that because in housing starts, we got 135 million starts, 1,335,000 starts, expected to be 1.31 million starts. So they started building more than they were expected. Well, that's a little bit counterintuitive. That number is an 11-month high for housing starts, and we're seeing a pullback in permits. It may be that they're trying to use up some of those permits that they already pulled. Because I've talked about this many times. Just because you pull a permit doesn't mean you're going to necessarily build. Once you start building the house, it means you plan to complete it. So I find the housing starts a little bit more of a pertinent number than that building permits, even though a lot of people look at that building permits number as forward guidance, if you will. Now, tomorrow we got some really good economic data. We got Draghi speaking again at housing, existing home sales, which is even more important than the starts, I believe. Janet Yellen speaking, and oil. So stay tuned for that one tomorrow. All right, on to the overall markets. We've got crude oil kind of coming off a little bit again today, basically retracing what we saw yesterday. It did come down to the point of control, which is where I was expecting. Remember, I said it was going to go down into that. I felt it needed to go down into that 63 handle. We achieved that today. Bounced off of that 23 Fibonacci extension level. Came just shy of touching it. I would say that was a touch, as close as that is. And bounced up and away today, coming back and revisiting that. I think that's where it's going to be comfortable, you guys. So that is where the market wants to migrate to. Then we've got gold futures coming off again today, but right there at the point of control. I've talked about this one. These points of control, you guys, are magnets. It's going to want to go there if it starts making that move. And these two different underlyings, gold and crude oil, is migrating towards that point of control that I talk so much about. Where the most time and volume has been spent, that's where it gets comfortable. All right, Bitcoin did make a bit of a late day rally yesterday, finishing close to the highs of the day. Seeing a positive move today, but a little bit lower than where we opened up. Some people are touting that it found a bottom. I still believe it needs to go down there and test it. I mean, it came up just that shy, and to me, it's just going to be always in the back of people's head if it doesn't go down there and tag it at least once. All right, bonds moving higher by only about a half a point. Remember, the mandate for the overall economy is an increasing interest rate if the overall economy is doing well. We saw that happen in housing starts. The expectation is there. Bonds moving higher, but it might be starting to be a place where we can look to get short bonds or some interest rate product. We got VIX coming up back into the teens, if you will, today with the overall equities coming off this morning. It really started looking pretty bad with another round of tariffs hitting China from Trump, that causing the overall markets kind of get a wet blanket thrown on them. We can see this in the Dow Jones Industrial Average, down over 300 points, albeit off the lows of the day. But again, right there at the point of control, that's where it's starting to find its groove, if you will. It broke below the 50-day moving average for a brief time and now has kind of buoyed above that now because we're right there at that point of control. You know, big drop below this 23 Fibonacci seems like it could be very bearish, but I think that that magnet is pulling it back up there a little bit. So we could start seeing a little bit of consolidation going on here in the equities in and around these areas. Now, in the NASDAQ was below, well below this Fibonacci, 50 Fibonacci extension, which correlates to the overall regular Fibonacci. We've talked about this in detail many times. That is a very deep line in the sand. That is a good support resistance. We got two lines lining up nicely, and those are major support and resistance, even if they were in and of themselves, but because they are lined up together, that makes it even more powerful, if you will. But we are slightly below that right now. Bulls and bears really fighting over that line right now. E-mini S&Ps came and broke below the 61 Fibonacci level right off the bat overnight and this morning when all this tariffs talk was coming out. We've retraced about half of those losses in the E-mini S&Ps. We can see this from an overnight standpoint. Overnight inventory, when these next rounds of tariffs came out, market really shrugged it off. Coming into today, overnight inventory getting washed out right off the bat in the morning. Once that inventory was cleared out, the market started rallying. These tariffs are something that is going to be a tax. Hopefully the FOMC sees that and maybe holds off, because that's going to hurt wages and everything else. All right, Caterpillar. I wanted to do this trade yesterday. I thought about it. It just was not looking very good. We got this doji right here from, what was that, on Friday. Yesterday, no confirmation. As a matter of fact, it was peeling below that. I thought about putting it on. Even Deere was kind of setting up the same way, looking pretty bearish. I didn't put the trade on yesterday. We broke below the 200-day moving average and cut through everything like butter. So I was able to get a pretty good location still. Not quite as good as where I wanted in the original when I first started looking at it. But I went into the July and sold in my margin account the July 155 calls in there for 72 cents. Then over in my IRA, I went in, did the July, sold the 155 calls in there, and then defined that risk in my IRA by buying the 172.5 calls. Those 172.5 calls, I only paid a little bit less than a nickel for it. That defines the risk, so it meets the rules of the governing bodies for an IRA. That's just a way to skirt the system, in a sense, to create that synthetic naked short in my IRA. So that's what I've done there. Did that whole trade for 68 cents. All right. So bearish on Caterpillar. I haven't covered anything else. A lot of the other trades kind of were looking a little bit better today when we were a little bit more bearish, but pretty happy with my overall portfolio right now. So I'm going to hold on to those things for a little bit longer. That's about it. Check out Friday's webinar. It's going to be a really good one. And tomorrow I'm going to be doing something with Trader Talk, and we're going to be going through some of the basics. So it'll be a refresher for maybe some of you guys that have been around for a while, but it'll be good nonetheless, because you will learn a few new things as well. I'm trying to make sure that everybody has some kind of takeaway from this 45-minute webinar tomorrow. So check it out. Go to protraderstrategies.com, find Trader Talk. That's about it. Can't take that? Take it easy.